This video is sponsored by Skillshare.
Hi everybody and welcome back to my channel. In this video I'm going to share with you 4 advanced drawing tools that you can use to utilize into your technical analysis when you're on the charts for trading. These tools are what I have learned over the last couple of years from my trading journey, and I do find them incredibly useful when it comes to analyzing price action to help to understand and hopefully predict what price action is going to do in the future. This can be really beneficial for your trading, and I hope that you're going to enjoy it and find some use out of today's video. But first, I want to say a quick thank you to Skillshare, who are sponsoring this video today. Skillshare is an online learning community that offers thousands of inspiring classes for creative people for a range of different topics, allowing you to either explore new skills or to deepen existing passions. Personally, I was most interested in the range of classes that were available under business, in particular trading. When I first started trading, I remember how overwhelmed I felt. With so many different options out there, I didn't really know what to look for to get more information. But Skillshare bring many different topics of trading to one place, making it easier to access a variety of information, whether that is trading forex, stocks, options, or cryptocurrencies. I especially found the Price Action Trading Masterclass by Gaurav Kula a valuable resource. This class has over 3 hours of educational content teaching price action trading and how to read individual candlestick bars on the charts. There are in-depth classes available relating to price action trading, as well as different trading indicators, along with support and additional resources. Want to learn more? Check out the description below. The first 1,000 people to use the link on my description box below or my code MindfullyTrading will get a 1-month free trial of Skillshare. See what you discover today. Okay guys, so here I am on the hourly time frame for Euro USD. I've just chosen a random pair to use as the demonstration for this video to share with you the 4 different advanced technical analysis drawing tools that we're going to be going through. Before I get into each of those tools, I just want to say to you that I wouldn't trade purely based on these tools. So if you are watching this video and you're thinking, great, I'm going to go on the charts, use this tool and take a trade, I'm going to share a quick disclaimer and a word of warning to not do that. As you probably know, trading consists of utilizing many things, not just one tool or one indicator. So you have to have a proven plan that works before you trade the live markets, of course. And that is what I tend to view as like a cocktail, and it comprises of many things like risk management, strategy, maybe you use indicators, price action, the trend, whatever it is that you use. There'll be a lot of things that can prize to make a good trade. So please don't go and trade using this tool straight away just on its own. But hopefully you can use these tools in addition to your trading plan, and they might give you a different context or perspective of the markets, and hopefully that will help you to become more consistent, more profitable. So now that's out of the way, let's jump onto the chart here and have a quick look at these tools. So I'm going to start with the first tool, and that is the fib retracement tool. Now this is a really useful tool. Quite a lot of traders do tend to use this, and it's very useful particularly in a trending market. So what I'm going to do is I'm going to go back in time and I'm going to find somewhere where this tool might come in. So let's just take this leg for example. As you can see, if I zoom out, we're clearly in a downtrend. Now like I said, this video is just to demonstrate these tools with you. I'm not trying to prove anything, just to share with you some new tools or the ways that you can use them to help you with your trading. And now just isolating this leg here in this downtrend, I'm going to mark the swing high here, and I'm going to mark the swing low, so we can agree that this is a clear downtrend and we have some pullbacks that provide opportunities to get into this if you're looking to follow this trend down short. The way that you can use a fib retracement is it can help you to identify where you might get into a trend. So if you are thinking, right, this is going down and you're up here and you want to get in and you're not sure where, you can use a fib retracement to help you to clarify an entry point to go short. So I've just removed some of the current market data and just to isolate that so we can get a clear view of the price action. Now what I'm going to do with the fib retracement tool is you basically would use this on the most recent pullback. So this is the previous lower high where price previously pulled back here before going lower to actually break the low here. Now once you've clicked on the most recent low high, we're going to drag that down to the current low of price. Now as you can see, this brings a load of lines up here, and these are the different fib levels of this retracement. They represent percentages of this move. Now different people tend to use different percentages as their reference for a pullback, depending on what your strategy is, depending on how you've back tested and proven that strategy. The most common ones are the 0.618 level and the 0.786 level. So in this instance here, we could be looking at this 0.618 level as a gauge for price action. I would wait to see price move back to this level, and then I'd wait for some sort of confirmation that price is continuing down. So you might decide this is the confirmation you're looking for because we've had another red candle. This you could use as a reference to get in short here, maybe set in another retest of that level here. But of course, structure is always going to be an important role. You can't trade just based on the tools alone. So for this example, you may set a stop above the previous lower high here. So that might be, let's just say, around about 40 pips stop. And for a target, you'd be looking for a break off this low. So you might be looking for a little bit more at 1.5. And just moving price action on here, you can see that it got triggered into the trade. You had a short period of time where you were in drawdown, and then price eventually moved down, breaking your take profit and making 1.5R. And that is a very simple example of a fib retracement tool. Next, we're going to look at a fib channel. And this is a very similar concept to the fib retracement, but this is used more like a trend line would be used. So for the fib channel, I'm going to go back to that swing high here, and I'm going to mark this down to a significant point in this trend. And once you've selected that, we can extend this down to one of the lower level lines here. And this just helps to frame price. At the moment we are in this downtrend, and it's safe to say that price is going to come back down to this lower trend line and perhaps bounce up. And the fib channel can just help to frame price in this way to predict the movements. So if we get a break of this middle line, it can help us to clarify whether we think price will bounce off that. It might go up to the upper level line here. So let's just move on price and see how it reacts around these levels. A way that you can use with the fib channel to help you to clarify an entry for a position. So here, as you can see, the price is continuing to move down. We've broken this level now with some clear momentum, and price has actually come back up to this fib level line here, this channel line. Now we've got a really nice bearish pin bar candle here. So I would think that that could be a nice indication for an entry short. If it's rejecting this level, we'd be going with the overall trend. So we could set a short here. We could just have a stop above this previous level here. And once again, just looking to break the low of structure, we could aim for a 1.75 profit. And as you can see, price just trends down very nicely. So it's using this fib channel line as you would a trend line really to help frame price and help gauge a position for an entry. Moving on to a third advanced technical analysis tool, and that is the pitchfork. Now there are actually two different types of pitchfork here. There is the standard pitchfork and there is the modified shift pitchfork. And in this example, I'm going to be using the modified shift pitchfork, which is what I tend to like to use when it looks like a market is reversing, which is what I think we might be getting here now on Euro USD. So we've come to this swing low level here, and just to make this quite clear, this was the previous low. We had a little pullback high here. We just broke that previous low only ever so slightly, and now price has actually broken this previous high here. In fact, you can see we're getting a retest and it looks like price is pushing up higher. Now this is where I would look to incorporate a modified shift pitchfork. So I'd use this recent lower high, I'd mark the low of the move, and I'd actually drag that up to where price has made a new high. And you can see that this is a way to help frame price, the way that price is moving, it frames the flow. So looking at this, we've got a really nice little double bottom pattern formulating here. It coincides with a retest of this a lower high that got broken, the structural level, and the median level of this fork. In fact, that could be a really nice place for a long. So you could look to get long, maybe if price came back down to retest this level here. Setting a stop underneath structure, so let's just set a 30 pip stop for this example, and a target could be a break of high and also the upper medium line. So we could look for a 1.5 target. And just to demonstrate how this would work, so prices come back down, it's activating my order, it's retesting this median level of the fork, and generally with the fork, if it comes back to this median line, it's generally going to be a high probability that it will bounce and target the upper median line. Price is consolidating a little bit here. And although we were in drawdown a little bit, it has bounced. It came back up to the median line, consolidated a little bit, and now it's pushing up higher to that upper level. And as you can see, it's starting to get some wick rejections of this level here. It's not a clear science, nothing in trading ever is. It's just another tool that we can use to help to frame price, to give you a clear indication of what you think price is going to do, and maybe to help gauge where the best entry is, the best stop, and the best target. So I'm just going to remove the fork now, and I'm going to move on to the fourth tool to share with you. And that's one of my favorite tools I like to use, and a lot of you have been asking after it, so hopefully this will clarify that tool with you now. And that is the trend-based fib extension tool. Now, the way that I like to use this trend-based fib extension tool, as you can tell, it's another trend-based tool. The fibs usually are. And for this move here, moving on from what we just established with the fork demonstration, price had been coming down. It's broken this little structural level here. We had a pullback down here, and now price has broken this. So it seems to be moving higher up. The way that I would use this, now I've established that price is pushing higher and we'd want to follow that uptrend, so we'd want to be looking for longs. I would use this trend-based fib extension tool to help to gauge an entry for a long position. And the way that I do that is I would measure the previous pullback. So here we have a high here, and it pulled back, making a new higher low here before pushing up past that high. I would measure this reaction leg, and I would apply this to the high. So essentially what we're looking to do is we're looking for price to pull back again, and we're looking for it to pull back the same amount of time it did on that previous pullback. And that's what this marks. So I have this level marked here, this purple line, which marks the same measurement here. And I'm waiting for price to pull back to that level, which might give me an entry long. My price is pushed higher up, so I'm going to just follow it and apply that to the high, but it looks like we might be getting a pullback now. So as you can see, it's come down and it's tapped this level here, and we have a little wick forming, but price is still coming down, so we need to wait for some sort of confirmation before we'd look to get in for long. And that looks like a nice candlestick of momentum forming here. So we could use this to set a long position, perhaps on a retest here with a stop below structure. I'm just going to leave it as that for now, just to demonstrate how this tool works. So you can see that we did get this dip down, this little retest of our entry. We had a little bit of drawdown here, but then price did come up and hit our theoretical target there. So I hope that you've enjoyed this video, something a little bit different, just sharing an insight into some of the tools that I tend to use when I'm doing technical analysis, how you can add them to your trading toolkit, and hopefully how you can use them to get more high probability trades and hopefully make some more profits. If you've enjoyed the video, be sure to hit the like button below this one, and don't forget to subscribe if you're not already part of the channel. If you currently use some of these in your own trading, do let me know in the comments below. It's always great to hear from you guys. And I'll catch you in my next video. Thanks for watching. Bye.